Hey everyone, Rob Folia, Folia Properties at Keller Williams Realty, and I want to talk with you today about what type of market we are actually in right now in 2023, August 15th, 2023, as I'm recording this video. One of the most often questions I get from clients, current clients, past clients, potential future clients is how does the market look? And it's kind of a strange market to describe. It's not a strong seller's market, not a strong buyer's market. It's not really a balanced market either, and so I've got a couple of visuals. Wanted to look at a couple of stats to show you what basically how we're coming up with all this. So let's just dive right in. As always, we're going to start off by just really at first talking about interest rates. Interest rates have continued to climb a little bit. Freddie Mac is showing them at close to 7%, which is close to the high that we saw last year. I think the high last year was 7.08. So I mean, it's an eighth of a percent off of what that high was last year with their numbers. What I've found just in talking with local lenders is that for most lenders, the actual rate that a buyer is going to get is going to be about a half a percent higher than this right now. So somewhere around 7.5%. Again, talk with your lender if you're curious about what rates look like today at this moment. But this is what people are seeing right now. And in this rise in rates has really impacted the market in kind of a strange way, because when we look at the actual amount of homes for sale, Davidson County, I mean, 3,500 homes for sale at the end of last month, down 12% year over year. It's like we talked about in our last video a couple of weeks ago, that bell curve never really peaked this year, and it's just looking like it's about to tail off, similar to what we saw in 2021, showing a lot of strange trends. So what we're seeing is rising rates, lower inventory. How is this impacting the market? And just looking at this right here, these are some stats that the National Association of Realtors puts together every single year, where they show the amount of homes that have sold this year in the U.S. In 2022, and I know there's a lot of numbers here, and I should have zoomed in a little bit. In 2022, the amount of homes sold in the U.S., a little over 5 million. Now, what does this mean? I mean, you can see it was kind of trending down last year anyway, and that was because of low inventory. It went from 6.1 to basically 5 million in 2022. So I don't know what that is off the top of my head, about 15% down. But the interesting thing right now is NAR is projecting 4.1 million units sold this year. So that's going to be about a 20% decline from 2022 to 2021. And yet at the same time, there's no inventory. And so I wanted to kind of break things down visually, because I think this might help people understand the type of market that we're in. And this is just a simple, axis graph. I'm not a mathematician, and I'm also not a graphic designer, as you can probably tell looking at this. But I wanted to share this with y'all because I think this is a pretty powerful visual for what we're seeing, and hopefully an educational tool as well. If you look at the two lines that are out there, supply and demand, if you think of a perfectly balanced market as where these two lines meet, that middle point, and I'll point to it here with my mouse, this middle point here of the image, that would be a perfectly balanced market. Middle of the road supply, middle of the road demand, everything's balanced. That's never going to happen. There's always going to be either demand that's coming, peaking in the market, maybe because of the time of year, or demand that's slowing, more supply, less supply. There's always going to be changes that are happening. And just to give y'all an example, for instance, what we saw, say at the beginning, say 2 years ago, at the end of 2021 into 2022, where that frenzied market, every home, it didn't matter what it was, every home that was out there had 30 offers seemingly in 30 seconds. That was a blue market for this. Low supply, very high demand. That demand was somewhat artificially created by low interest rates, because you had investors that were very hot on the market, but you also had homeowners that were willing to make a move because they didn't mind trading in their 3% mortgage for another 3% mortgage, or maybe their 5% mortgage for a 3% mortgage. So demand was very high. Supply was low, and at the same time, you could also look at maybe a purple market where demand is high and supply is high. To me, that almost reminds me of a market like we saw in 2018, 2019, where it was still a seller's market. There was still demand, but yet at the same time, there were homes out there. And as long as a home was priced right, we could expect a couple offers, maybe 2 offers, 3 offers in that first weekend on the market, because demand was there. And yet supply was also, was firmly there. We weren't looking at a market where there were no homes for sale. The flip side of all this is the bottom of the supply line. So meaning where there's low demand. So take for instance a yellow market for this, where you have high supply and low demand. That was a market like we saw, 10, 15 years ago, where interest rates were good. There, but yet at the same time, there was a lot of people who were scared about entering the market because we had just seen a recession, we had just seen an economic collapse brought on by all these bad mortgages that were written. There was a lot of supply. I mean, we've looked at stats before, and here I'll just pull them up real quick so you can see what I mean. When we look at months of supply and we go back all the way, just say to 2000, let's just look at 2011, 10 or 11 months of supply here in 2011. I mean, remember, if you haven't watched my videos before, 6 months is a balanced market. Lower than six is a seller's market. Higher than six is a buyer's. So 11 months of supply, that's an extreme buyer's market that we were seeing back then. That means there's a lot of supply and very low demand. That's that yellow market, according to this. Now, we're not in any of those three markets right now. We're not in a market where there's, a ton of homes out there, but low demand. We're not in a market where there's a ton of demand, but a little amount of homes. And we're not in a market where there's a ton of demand and a lot of homes. We're really in that green market right now where there's low supply and yet demand has softened as well. I can show demand has softened based on these numbers. I mean, you can see the trend from 21 to 22 as interest rates were climbing. That dropped down about 15%, and now this year it's looking like it's going to drop about another 20 in terms of the amount of homes that are selling. That's showing that the American public is not looking to move right now. A 2-year trend from 21 to 23, if this number shakes out, the 4.16 million units, that's going to show roughly a 30 to 33% decline in the amount of units that's sold in the U.S. That shows that less people are moving. That's that low demand, but at the same time, it's low supply just based on these numbers, right? If you look at homes for sale and you see this right here, and we see only 3,500, down 12% year over year. When we look at a 5-year trend, I mean, you can see this is about the lowest we've gotten, aside from the beginning of 2018, which obviously it peaked in 2018 higher than this year. Aside from the beginning of last year, where that was that all-time sellers market that hopefully, honestly, we never get back to because it was just frenzied. I mean, it was ridiculous for people. This is a low point of inventory for this time of year, so there's low supply, there's low demand. It's kind of that green market. Now what does this mean for you? That's probably the $1 million question, and it's going to depend on the person, because everybody who's watching this, and hopefully all my past clients and friends, you guys are checking this out to stay educated on what's happening in the real estate market. What does this mean for you? It's going to depend on the person. It's going to depend on the scenario. So just say hypothetically you have to move right now. Something's going on that's causing you to move, whether that's a job change, a familial circumstance change, whatever it might be. It's not a bad time to move. Historically, yes, rates are not great, but at the same time, if we look all time, I mean, you look back 30, 40 years ago, they were double what they are today, even higher than that. So, the reality is it's not a bad time to move, as long as the numbers make sense for you. So the very first step you need to do, if you're curious about what this looks like, is you need to reach out to me. You need to reach out to your trusted lender. I've got a couple of great lenders I can connect you with if you're curious about what your situation might look like. But point being, you need to get clarity on those numbers. And that goes for not only the people who have to move, but the people who want to move. Maybe you're in a situation where, you're just ready to downsize, or you're just ready to get that bigger home for whatever reason. Again, it's not a bad time to do it as long as the numbers work. And so that first step is getting clarity on the numbers to make sure that things make sense for you right now. I can help you with that. I can get you connected with the right people that can help you with that. And we can take a look at what things look like for your home, just to make sure you've got that clarity, because it's not a bad time to move, but it's got to make financial sense. And that's what the reality is, because this green market, this low supply, low demand market, that's what we're seeing right now. And honestly, until interest rates change, or until the amount of supply changes, I think we're going to be in that market for a minute. It just is what it is. I mean, the reality is no experts can tell us what interest rates are going to do. I remember hearing some experts say this year they thought rates were going to be back into the fives. Well, you can see it. I mean, remember, the blue market is the 30-year fixed rate. I mean, we haven't been in the fives since September of last year. It's almost a year now. And yet there were experts that were saying marry the house and date the rate because you can refinance. Guys, that's a fool's advice. And so please don't listen to that. You got to look at what the numbers look like today. And so we don't know what the future is going to hold for this. And interest rates change, or until the amount of homes for sale goes up, we're just going to be kind of in this green market. Because when interest rates change, demand will come back. Supply will start to come back too as more people move. But unless something happens to our economy, causing people to have to sell if they're underwater on their home, which honestly is going to be kind of a tall ask, because so many people have low interest rates in their home that they're not going to necessarily fall behind. Hopefully, anyway, and knock on wood that's the case for a lot of people. Knock on some wood here, that the reality is we might just be in this green market for a minute. And so again, if you're curious about what this means, maybe I was too quick. Maybe I just did the a 10,000 foot viewpoint of what these four markets look like: the high demand, low demand, high supply, low supply markets. Reach out to me. Happy to help however I can. Remember, no questions too big or small. I'm happy to answer them all. Give me a shout. Happy to be of service. Appreciate y'all checking out this video as always. And until next time, thank y'all so much.